What you want is somebody who will sit down and talk to you about how you like to do your banking. I mean, some of us hardly ever go into a branch, and some of us only use internet. Some of us, when we're buying our groceries, that's when we get our cash out for the week. So what you actually want is a bank who's going to work with you and say, look, I'm this type of spender, I'm this type of saver. These are the types of products and services that will give me the absolute minimum bank fees. Especially for young apprentices, most of the banks will offer some sort of free banking package for you. So you want to find out really clearly about what your fees and charges are on your products and make sure that that's matching your needs. We've all got different banking needs, we all like different styles, so make sure you sit down and talk to a banker about what really fits you. One thing that we really try and do with our young apprentices is trying to set them up on a savings program right from day one. So these are things that perhaps at my age I was taught in school. Often it's not taught in our schools now. So how do you actually start a savings program? You know, and what are the benefits of compound interest? And you're going, what? What's compound interest? It's when you put $1 away and the bank pays you a little bit of interest and that becomes $1.10, and next year you put another $1 in and then it becomes $1.20, and then you get interest on the $1.20 and your savings grow. This is how your superannuation also works. So you think I've got plenty of years ahead of me. Well, Debbie and I were talking. I'll tell you what, those years soon creep up, don't they, guys? They do, they do. And you think, well, you know, I'm 18, I've started my new job. Well, all of a sudden, you know, you're in your 40s and you're thinking, well, we've only got a couple of years to go, another 20 years, and I want some early retirement. So have you put that nest egg aside? So you think retirement and superannuation's a long, long way away. Let me tell you, the years go by very quickly. And if you want to have the lifestyle that you can kind of imagine of, I can have a trip whenever I want, I can sit back and go on that cruise whenever I want, I can do whatever I want to do as far as having my beach house and having my house paid off, you need to start saving now. So savings is one of the big things, and even if you put $5 a week aside, $10 a week aside, as your salary increases, you start to put more aside, and then all of a sudden it's $50. Then it might get up to $100, you know, when you're on the big bucks. So, you know, those days are ahead of you. So make sure as, you know, young apprentices, you're thinking about your savings, and sit down and talk to your banker about your short term, your medium term and your long term goals. So the long term goals is actually by the time I'm 30, I actually want to have a deposit for a house. But, you know, by the time I'm 25, I want to have enough to actually go and have an overseas trip. And I want to be able to take 4 months off work, and I want to drink my way around Europe and have a ball of a time and come back and know that I've got a job there, know that all my bills will be paid while I'm away, and know that I've got something to come back to, so I'm not arriving back and thinking, gosh, when's my first pay arriving? No, because you've saved for it and you've planned for it. So this is something that your banker should be able to sit down and work with you, your short-term, your medium and your long-term saving goals. And all of the banks will have particular products that will actually sit and meet those goals. They'll have different fee structures on them. So some of them will have penalties. They'll have a higher interest, but they'll have penalties on them for taking your money out. Tell you what, those are good accounts when you're young. That means, oh, do I really want to draw that money out and go out this weekend? Oh, it's going to cost me $2 to get that money out. No, I'll leave it in there. So that means also if I take it out, I'm going to lose some of my extra interest on that account. So for your really serious savings accounts, think about some of those products that will discourage you from dipping into it all the time. But you know, your working account that you want to be able to have set amount aside. And the other thing that our bankers will sit down and do, and we'll talk to you about budgeting. And you think, oh, that's an ugly word, budgeting. But budgeting's not about cutting back. Budgeting's actually knowing what you can spend and what you can't spend. And at the end of the day, you decide what that is. So this is, you know, how much do I need to live on? How much board or rent do I need to pay? What are my food costs, my petrol costs? and how much do I want to save? And so you can actually work backwards and say, well, you know, these are my primary goals, and it might be that I want to buy my first car, or it might be, you know, that I want the new stereo for the car, or whatever it is that your short-term savings goals will be. Make sure that you've got that there in your savings program, and you know, through your internet access you can be able to sit there and watch those savings grow. So I think those are sorts of things that you should be demanding from your local banker. You should be just sitting down and having those conversations around those short-term, medium-term and long-term goals. Peter talked about income protection, and the other thing I want to talk about is a little bit about life insurance. There's only one time to get these products, and that's when you're young, when you're fit, and you've got no illnesses. Don't wait until you're my age and then want to top up your insurance, and then the insurance company goes, oh Sharon, you're a bit overweight. You go, you reckon? And they go, yeah, you might have to pay a premium on your insurance because, you know, you're getting a bit old now, and you're slightly higher risk than you were when you're 18. So there's only one time to get protection, and that's when you're young, when you don't have to do medical examinations, and it's cheap as chips. It's really cheap. And what happens over your life as you move through all your life stages is the insurance companies go, gee Sharon, you're a good risk, you know, you've been paying your premiums, and you know, you've never had any claims on anything. We'll give you an automatic extension, and they give you more life cover for just a little bit more money. And over the years, your protection gets bigger and greater, and you get a better policy. And you don't even have to do anything for it. You don't have to go off and get medicals quite often. And so then by the time you sort of get to the time when you want to buy your first home or your first big asset, you've actually got some cover. The other thing that Peter also talked about was the income protection. So you think, well, I actually don't have a big income now. But your income's going to be continually growing. And especially when you get that, I don't know, that first car purchase, and you're paying off your car either through your bank loan or through a finance company. And then what happens if you haven't got that income and you've got to sell that asset, and that asset doesn't clear the debt, the loan that you've got on it. So you think it's all great when you buy your $20,000 car, but 6 months later it's worth, I don't know, what is it worth, 15,000? But you already owe 18,000 on it. Okay, and I don't have an income. But again, when you're young and you're working and you've got that regular income, if you've got that protection, it means that cover will pay your car payments for you. Once you get to your mortgage, that cover will pay your mortgage for you. Now, it might only pay 80% or something like that, but the bulk of it's going to be covered. And perhaps with a little bit of part-time work or a bit of help from family or friends, you'll be able to make the difference up, and it means that during that time you might be able to keep that asset instead of having no car and still having a loan and thinking, now what am I going to do? So, again, there's one time to do that, and that's when you're starting out and when you're young. And so your banks will be able to help you with that as well. So banks and insurance companies offer you income protection and basic life cover. You think, well, it's all right, Mum and Dad will look after me, they'll pay the loan. Well, I've got news for you. Most when I say, well, shall I give Mum and Dad a ring? What will they say? Tell him to take out the insurance, I'm not paying his car loan for him. So we get that quite often, don't we, Debbie? Oh, it's all right, the family will see me, right? Well, I'll tell you what, if you can't pay your car loan, Mum and Dad want to pay it for you. Or, or your brother doesn't want to pay it for you, or anyone else in the family. So, it's about taking responsibility for your own financial future, your own financial security. And your bank should be your business partner. Start out with a good relationship. If you don't have a good relationship with your banker, go and find someone else. Because it's going to be so critical that you form a really good banking relationship, because, the other people who are going to be able to help you throughout your life stages and help you through all the asset purchases that you want to make in the future.